Technology stocks are today the talk of the day, as the Indian technology services companies are showing some disappointing results. Growth in the Western markets, which gave them the dollar revenue, and as a result in Indian stock markets, a better than expected visualization is shrinking because the dollar spendings, with the apprehension of a recession in Europe and the Ukraine war not showing any signs of ending, the Western market revenues of Indian tech services company has come into the apprehension category. What are technology stocks? Technology stocks are companies who are listed entities and who are engaged in technology products and services. The global industry classification system puts technology industries into three buckets. First one is software and software services, which includes everything under the world: integration, cloud services, analytics, security. All software services are put under that. The second category is hardware and hardware services. The endpoint devices manufacturers, the computer manufacturers, the network equipment manufacturers are included in hardware and hardware services. And third distinct category is the semiconductor and computer chip manufacturers. Technology stocks has become an unavoidable and indispensable part of any investor's portfolio. A few years back, all the large companies in the stock market, like the GEs of the world or the Hindustan Lever in the Indian bourses, or for that matter ACC, Tata Steel, were ruling the stock market. Industrials were at the top. In the last few years, world's most valuable companies, namely Apple to begin with, Amazon, Google, etc., all of them have brought into sharp focus the ability of the technology companies to drive value. While all of you are advised to do your own research, my humble opinion is that tech stocks still continue to be good bets because of three or four things. One, in terms of diversification, there is no sector which matches tech. Although the broad classification, as I told you, is for three categories: software, hardware, and semiconductor manufacturer and related services in each of these, there are enormous amount of diversification in each one of them that is possible. Second one is growth opportunity. Tech stocks in the last 4 or 5 years, especially during the pandemic and immediately after the pandemic, and as globally, every industry, be it manufacturing, be it trading, be it banking and financial services, are poised to digital transformation, because the capability of digital to transform the way in which business is done and create value by weeding out productivity and bringing out new innovative ideas into a faster go-to-market scenario is unmatched. So the growth opportunity is very, very high. Tech stocks are very volatile. During the Ukraine war and during the pandemic, during the conflict which happens geopolitically between various nations, the first stocks to be impacted are the technical stocks or the technology stocks. Second, the valuations are very, very high. Whether you give it price to book or price to earning, whatever you give, is very difficult to find the right place. Unless you are very research oriented, you have the database or you have the domain expertise to compare inter-se between smaller niche players in the same subject, and you have the benchmark and you have the ability to compare. Third important thing, if some part of your investment is driven by the dividend declaration, then because of the high valuation A, and second, generally these companies in the growth phase, they don't declare dividends. Obviously, as I told, software and software services sector, as seen in the slowdown of the Western market and the laying off that we are seeing, obviously is pointing the software services, software products are probably not doing that well. Programs like Make in India, self-sustainability within the nation, and not depending on imported chips, both because of the China problem as well as because of the Ukraine problem, points to the fact that hardware and semiconductor manufacturers are likely to do better. If you do not have the depth of research, then better to invest in the three known instruments, that is the mutual funds, exchange traded funds, and the index funds, which track and professional managers for a small fee or a small cut from your investments ensure diversification, ensure non-emotional dealing with the stocks. But if you want to get into your own investment in technology stocks, ensure diversification, look at the cash component versus the leverage of companies. If the company is highly leveraged in the rising interest rate scenario, which is predicted for the next 2 or 3 years, it is likely to return much less because the profitability and growth opportunity will be impeded to that extent. Net, tech stocks are very good for diversification, for creating growth opportunities, but because they are volatile and because they are amenable to valuation difference inter se, you will have to be very knowledgeable investor and you will have to go deeper into it. Thank you very much.